What is going on, guys, and welcome back to the Young and Intelligent Money Investing channel. Today we are going to be talking about dividend appreciation, but before we do that, I just want to thank you guys and welcome all the new subscribers we have on the channel. Leave a comment down below. There's been a lot of new people coming in, and I just want to see some new faces in the comments, as well as the old guys. Welcome them to the channel. It's great to have you guys here. And also, please drop a like while you're down there. Thanks, guys. So, dividend appreciation. That's really what pretty much all young investors are going to want when you're kind of building towards a future. Really, all investors who want to be in a stock for the long term. You want to know about how a stock's dividend is going to appreciate as well as their equity value. And while these two will likely go hand in hand, because as more profits come in, dividends get higher and the equity value gets higher, you also want to be looking out for the companies that raise their dividend on a consistent basis. And those companies are often seen as safer in the stock market because when a dividend is slashed, usually the equity price goes down a lot. Just look at what happened to GE. GE's been getting crushed this year, and then they had their dividend get slashed, and I think they dropped another 10% right after that, which is just really bad for investors and just kind of is bad for the outlook of the company. So when you're increasing that dividend, that means your company is having good growth, and it's pretty healthy because that means they're comfortable paying out more and more money to investors. So a great way to get some of that dividend growth is through a Vanguard ETF called VIG. Now VIG is going to pay out a quarterly dividend, and let's look at what VIG is all about. So the Vanguard Dividend Appreciation ETF tracks a market cap weighted index of U.S. companies that have increased their annual dividends for more than 10 or more consecutive years. So a lot of the big names on this list have been doing dividend appreciation for 50 or so years, but there's newer companies on here, and 10 or so consecutive years means they've had a good track record of dividend appreciation. Not great, like we'll talk about dividend aristocrats later, which are 25 or more years in a row. But 10 years, you're feeling pretty safe, and you'll see why. Well, let's look at some of the companies on here over at Yahoo Finance. So here's the breakdown. The share price of VIG right now is $104. The expense ratio is 0.08%, which is great. We always know Vanguard's famous for their low expense ratios, and that's going to save you a lot of money in the long run. It looks like, let's look at their top holdings. So number one stock, Microsoft. Great dividend stock, also pretty much a growth stock, so that's going to be great on both equity and dividends. Johnson & Johnson, we know that they've been around forever, great dividend stock. PepsiCo, 3M, Medtronic PLC, Union Pacific Corp, Accenture PLC, United Technologies Corp, Abbott Laboratories, and Texas Instruments Incorporated. So those are some great big name companies that give out some safe dividends. And another great thing about this VIG, the dividend yield is only 1.85 right now, which is about S&P 500 level, which makes sense because there's such big companies in here. But that 1.85% that you're getting right now is going to be more and more down the line, because we know that when you're in VIG, that dividend ratio, that dividend yield is going to be increasing. So the percentage may stay the same, but that amount that you're getting back, your return on investment, is just that percentage is gonna get higher and higher and higher, even if the dividend ratio kind of goes up in proportion to the VIG equity value, if you guys understand what I mean by that. So this is just a great way to get some passive income through a pretty safe stock that's going to appreciate over time, and 10 years down the line you'll be thanking yourself for putting money in this, and you'll be getting that dividend income every year, like through that whole time, which is great. Every quarter, everybody loves to get passive income through dividends. It's just like your rent check, super easy. Don't have to worry about it. This is not a stock or an ETF that you're going to lose sleep over the equity value or anything like that. And it has a relatively low P/E ratio of 24.5. So I hope you guys enjoyed this video. Please remember to drop a like and subscribe if you haven't already. About 75% of our viewers, they watch the video all the way through, and then they do not subscribe after. So just subscribe, just try it out. I hope you guys enjoy the channel. I'm trying to make it as great as I can for you guys, and I will see you in the next one.